Hi, this is Ron Rowland from Money Markets TV. Seems like the sovereign debt crisis in Europe just keeps getting worse. So it's no surprise that few people are recommending European stocks these days. But I think that if you focus on the right part of the region and wait for the right time, you could find some incredible values there. The right part of Europe is its largest and strongest economy, Germany. It has clearly benefited the most from the creation of the single euro currency in 1999. That's because German factories and workers are vastly more efficient than the rest of Europe. Other countries simply can't compete. This advantage has allowed Germany to run a massive export surplus with their neighbors. Germany has invested that surplus in places like Greece, Ireland, Italy, and Spain, and in fact creating new markets to buy German goods. German companies now operate across the whole continent. And because the other countries all use the euro, they can't devalue their own currencies to become more competitive. No matter how this debt crisis plays out, I suspect that German banks and businesses will still be standing when the dust settles. And at that time, U.S. investors will have a great opportunity to buy into Germany's stock market at a good price. The best way to do that is with exchange-traded funds. The largest and best-known Germany ETF is the iShares MSCI Germany Index Fund, ticker symbol EWG. It focuses on the biggest names in the country, most of which will be familiar to most investors. EWG's top holdings are Siemens, BASF, SAP, Bayer, Allianz, Daimler, Deutsche Bank, E.ON, Deutsche Telekom, and Linde. But while these companies are huge, they're not necessarily the best the country has to offer. That's why I'm also keeping an eye on the iShares MSCI Germany Small Cap Index Fund, symbol EWGS. Its top 10 holdings are not nearly as well known as those of its larger brother. In fact, you may not recognize any of them. When you compare the sector allocations of the two ETFs, you can see that they're similar. But the small cap EWGS has significantly greater involvement in German industrial and technology stocks, the key engines of Germany's export economy. For that reason, I believe EWGS is in a far better position to prosper from an eventual economic recovery in Europe. Yeah, small cap stocks tend to be more volatile, but they can also have greater growth potential. Of course, now is probably not the time to get into either one of these ETFs or anything else from Europe. But sooner or later, that time will come. And when it does, you need to have these names on your watch list. I'm Ron Rowland from Money Markets TV. Thank you for watching.